Greetings all and welcome back from YouTube Landia out there, you guys. Doing a little bit of a different video today. I know I'm just playing crypto, but this involves the crypto marketplace because it's going to be telling you a brief overview of what is going on right now with the economy. You know, people out there, I'm sure you've run into places where you have shortages, either where you work or when you went to go buy a Slurpee, they didn't have straws or they didn't have napkins. Or you went and bought some fries and they didn't have ketchup, and they didn't have weird stuff, right? That's a supply chain issue problem. Also, if you've been grocery shopping, you may have noticed that the prices have gone up by 10, 15%, some things 20, 30%. Yeah, so the dollar be on its last old legs. We'll just say that. And this is just more of like an awareness thing as to reasons where like cryptocurrency is more or less a safe haven for your money. And as the dollar it gets debased more and more, and as they print more dollars, that is reflected in the price of cryptocurrency. So the actual true value of something like, say, Bitcoin is actually hard to gauge because all of the countries around the world are printing so much money. If Bitcoin was, or not if Bitcoin, if the dollar was still based in the gold or silver, how much would Bitcoin probably be worth? It probably might be worth a couple $1,000s if money was still actually based in gold and silver. But because it's fiat, pretend fantasy money that is based on nothing, the more money that they print, the higher the price of Bitcoin is going to go. The higher the price of everything is going to go. Now, the amount of dollars in the, everyone thinks, ooh, Bitcoin 100K, Bitcoin 50K. Well, the thing is that that doesn't mean anything if the money doesn't buy anything. Like Bitcoin is going to hit $1 million one day. The question is, how much is it going to buy? If it only buys a bar of soap, it doesn't matter if Bitcoin's at $1 million. Now, if it's based on a currency that's actually worth something, then that would be a big deal, right? But as long as we're basing things in US dollars, it's kind of like, okay, it's okay for right now, but what about 5 years from now or whatever? So that's how you have to look at things. So we're going to look at this article here that says Hardware Store Billionaire explains big potential problem for Americans and their money. Right. This is the guy from Home Depot, who's one of the causes for this. He's not the cause, but America, in a sense, is a big business run country that's basically essentially fascist. A lot of people out there, oh, I can't believe he said that. Well, look, it is. The bigs get bigger, okay? And the little guys get less and less and less and less. And it's been that way ever since the baby boomers had Gen X. Once Gen X took over, it was power of your dollar lost about 10 times what it was worth. And that is all part of the great big plan, the great reset and all of that. Anybody who might know about that. Told you this is a different type of video where I'm going to get into briefly some other things that most people may be not aware of. But we are going through a time now where the economy is not crashing because everybody is just stupid. The economy is crashing because a fiat currency always crashes. But while it's in the process of crashing, you basically have free money to do whatever you want. And all of the big people, the big, you call them the elites or whatever you want to call them, basically rob everybody else and line their pockets. And now that system is coming to an end to where we get into a new system that they want to put out that will continue on robbing everybody of everything that they have. Now, in America, if you, depending on where you're at, what state you're at, you're basically paying most of your income into taxes. When you count inflation, you basically are left with nothing. You got 20, 30% of your actual earnings you actually get to keep. I wouldn't even think that because there's so many taxes and tariffs, and I don't count buying food and buying clothing as something that's necessarily even your money. It's just your necessities, right? But you got to pay. You have to buy a license to go fish. I mean, come on. There's all of these weird taxes and tariffs on every little thing. And there are ones that you can't avoid, like gasoline taxes and things like that. And it's by design, guys. It's by design. And the reason that I start a cryptocurrency channel is because that is a venue out of that hellish system. It's a venue out of the bankster-run Wall Street system. It's a venue out of the bigs, the Home Depots, the Menards. Did you know that every grocery store really in the Midwest is basically a super value grocery store, even though they all have different names on the front of the building? But all of their stock comes from super value, right? It's like that these super mega conglomerate corporations that have 150 names underneath them. And then those conglomerate corporations have investors like BlackRock and Grayscale and all these big bigs. All right. And again, we have the government then that's also bailing out these companies because they're necessary, because they have 150 other smaller companies underneath them. So we just got to give the taxpayer money over to them. And then they say, I guess we're incompetent. We're politicians. We don't know what we're doing. Oh, they know what they're doing. They know what they're doing. So this is from Ken Langon, is the son of Italian immigrants who describes himself as a dumb kid on Long Island that barely got out of high school and almost flunked out of college. Yeah, isn't it funny how every one of these guys who's a super mega conglomerate corporate billionaire always has that same old sob story like, I was just an abandoned child underneath the bridge and then somebody found me and now I'm a billionaire. Is that how life works? Is that really how things work? So he says that in addition to this, his and his partners getting wealthy, more than 3,000 of his entry-level employees have become multimillionaires in his new venture, whatever it happens to be. My guess would be fraud. Okay, that's generally how these millionaires make money, is by fraud and by creating money out of nothing and by knowing people in politics. You know, you give me some heads up on some trades or give me a deal on this and that, and I'll donate 10% of my profits to your campaign. This is how these things work. And recently, this is why they don't like Bitcoin too, because Bitcoin, you can track where money goes. And recently, Langon went public to explain the big potential problem he sees for Americans and their money. Americans don't have any money. It's Rothschild's money. Okay. People have been talking about the problems with the money. Ron Paul made it mainstream back in 2008, and people just ignore it. Because Langon's Home Depot connection has unique insights into the current status of the U.S. economy, the labor shortages, supply chain issues, soaring prices, and increasing inflation. That's why it was telling to see Ken Langon's CNBC recently describing a huge shift now taking place in the U.S. economy and the financial system. It says the government is already creating major distortions, and that people they are trying to help are the ones who are going to get hurt the most. Me understand this. The government is not there to help you, the average person, at all. They work for the banks. They work for military-industrial complex. They work for the medical industrial complex, and any one of these other complexes like Home Depot who writes large checks to their campaign. What's interesting is that Langon is not the only one who's predicting substantial problems. At least 8 other billionaires have similar concerns. It's not a secret. Anybody with eyes knows that the system is collapsing. The question is, what are you going to do about it? Are you going to wait around for these government psychopaths to try and fix it? Do you think they're going to make things better for you? Or are you going to invest in an asset that is better than gold, that cannot be taken from you, and is completely decentralized, such as Bitcoin? And it's global. So America doesn't like you. You can pack up and go to El Salvador or Nigeria or Mexico or wherever. A wealthy former Goldman Sachs banker named Dr. David Efrig agrees and says most Americans are completely unprepared for what's about to take place in our country. And this guy from Goldman Sachs is like, they're completely unaware. Yeah, he caused it. They're part of the problem. And they look at it like, well, not my problem. I'm going to get what I can get. Goldman Sachs has been fined billions of dollars for manipulating markets. Yeah. them and Chase and yeah, all these guys. They manipulate the market. SEC gives them a fine, and then they go back to manipulating the market. And then they take somebody from Goldman Sachs then becomes the Treasury Secretary, right? This is how the politics works. But if you do not use their currency, they don't have any power, people. Where I'm going with this. Dr. Efrig adds, this is not surprising since roughly half of the U.S. population was born after 1981, and we simply haven't seen anything like this in roughly 50 years. Okay, I don't know how well this is going to come up, but you take $100 in 1900, and immediately it lost 60% of its value after the Federal Reserve took over. And then we'll say, since he said 1981, so in 1980, your $100 is worth 1/10, so it's worth $10. And now, since if you were born in 1980 and through the last 30 years, 40 years, now your $10 is now worth $3, okay, in actual purchasing power. In order to make the federal minimum wage of, say, 1965, the federal minimum wage was $1.25. The federal minimum wage today would have to be about $30 an hour to have the same buying power. And guys like Home Depot, man, are part of the problem. Because what are they paying at Home Depot? Slightly above minimum wage. They're not giving you $20 an hour, and they're only giving you 18, 20 hours a week, no overtime. And there's maybe 2 or 3 people in the entire store that are full-time. And part of that, of course, is due to, well, we won't go too much farther onto that. So this is another graph that says the buying power of $1 over time. It's the same sort of a thing, except this is starting at $1 instead of $100. And it's, you know, in case you couldn't see it on the other slide, we'll go back to 1981, where we're up here, where you're at about 20 cents or so. And now you're at like 3 cents, 5 cents maybe, about 5 cents. So that lets you know how the fiat works. And now baked into the system with fiat currency is an inflation rate of 2% that is acceptable. So basically, the government says it's okay for us to steal 2% every year after year after year after year after year after year after year, and everything is fine with the economy by stealing 2% compounding every year. That's horrible. That's why they give you this cost of living increase that for a lot of companies is like a nickel an hour. Nowhere near 2%. That combined with the fact that they make up the statistic as to where the 2% comes from. Real inflation is somewhere around 15%. Real actual inflation that you see this year, I know because I changed price tags. Okay? Things going up by about 15%. So, wages have not gone up much in 20 years, 25 years probably. But inflation goes up, keeps ticking 2% year after year after year, or 5%. 2008 had a huge problem with the housing market crash. And now we have this problem now here where they want to do their great reset. Okay? This is all the more reason, guys, to get involved with cryptocurrency. This is what cryptocurrency exactly is for taking your power back. You want to look, and we'll go to, we'll take a look at Bitcoin. Let's go back all time with Bitcoin. So let's say, obviously we can't go back to 1980, but we'll just go back to when people were actually figuring out about Bitcoin. Bitcoin in 2018, you know, you could get it for around $3,000. And now we're up to $52,000. Okay, there isn't any other investment or any other asset or any other anything that can match Bitcoin as far as anything. as its store of value. And Bitcoin only gets more and more valuable the longer it's out and the more people that use it because of the mining that takes place. And now it's being used as a currency. So how to solve this problem here of your dwindling dollar is to not use the dollar. If you have to use the dollar, you can transfer or convert into a dollar, but don't use the dollar. They're going to come out with more stimuluses, and you're going to get your little $2,000 check, which is effectively, worth maybe $500 today, right? By the time they do a stimulus, it'll be worth half as much. Or, you could keep your money and anything extra you have, invest in cryptocurrencies, and then when you need it, convert it. And hedge against this inflation wall that is coming. Yes. And the government knows it, and they don't like it. We're going to talk about that. Crypto's rapid move into banking elicits alarm in Washington. Pretty soon, it's going to be like the crypto terrorism. The people, they won't use our crappy money. They want to use Bitcoin. We got to do something about it. Came out yesterday. Blockfi, a fast-growing financial startup whose headquarters in Jersey City are across the Hudson River from Wall Street, aspires to be the J.P. Morgan Chase of cryptocurrency. Now, Blockfi made a huge mistake in opening their doors in New York because New York hates cryptocurrency because they're Wall Street. They cannot stand cryptocurrency. It offers credit cards, loans, and interest-generating accounts, but rather than dealing primarily in dollars, Blockfi operates in the rapidly expanding world of digital currencies. One of the new generation of institutions effectively creating an alternative banking system on the frontiers of technology. You are your own bank. There is no banking system. Everything is peer-to-peer because all of the trust is in the blockchain. You don't have to trust that someone's going to pay you on their bill, because the settlement is right there and the blockchain vouches for it. And you can track where the money came from, where it's going, and whether or not they have the money in their account or their wallet, right? You don't need banks. This isn't 1940, right? We have computers. How many people send regular letters? We are just at the beginning of this story, said Flory Marquez, 30, founder of Blockfi, who was created in 2017 and claims to have more than $10 billion in assets, 850 employees, and more than 450,000 retail clients who can obtain loans in minutes without credit checks. And I'm sure Flory Marquez, 30-year-old Flory Marquez, was an orphan girl who was a refugee from Burma, right? Who survived on 10 cents a day. And was living in the streets of New York until she decided to start Blockfi. That's how the story usually goes. Nothing against the person. I'm just saying they're 30 years old and they're worth $10 billion in 3 years. But to state and federal regulators and some members of Congress, the entry into crypto into banking is cause for alarm. The technology is disrupting the world of financial services so quickly and unpredictably that regulators are far behind, potentially leaving consumers and financial markets vulnerable. Yeah, they're vulnerable from excess taxation, right? Because they're too slow. And here is the real kicker, guys, is that unless you're dealing in Federal Reserve notes, none of these people have any jurisdiction. Okay? You can't fraud somebody on a blockchain because everything settles pretty well instantly, or the blockchain takes care of itself, or the miners settle stuff. You can't fraud people, at least on Bitcoin. You know where all the transactions are coming from and where they're going. So the need for regulation on this stuff is basically zero. It's just, how can we get in there and tax it? How can we get in there and tax it? That's all it is. In recent months, top officials from Federal Reserve and other banking regulators have urgently begun what they are calling the crypto sprint. Try and catch up with rapid changes and figure out how to curb potential dangers from an emerging industry whose short history has been marked as much by high-stakes speculation as technological advances. You mean like the stock market? mean like the stock market? Where the stock market people that are in charge of the Social Security retirement and all that stuff, they just gamble on stuff, and then when they lose, then the taxpayer bails them out, and then when they win, the money goes to them and their buddies. That you're talking about that thing? In interviews and public statements, federal officials and state authorities are warning the crypto financial services industry, and in some cases vulnerable to hackers and fraud, and relying on risky innovations. Last month, the crypto platform Poly Network briefly lost 600 million of its customers' assets to hackers, much of which was returned only after the site's founders begged the thieves to relent. Well, people get hacked. The Federal Reserve got hacked. You know how many dollars the Federal Reserve loses? Quote, loses to fraud and hacking. The Federal Reserve and the stimulus, they sent like $20 million to the Nigerian prince that sends you spam emails saying, I just need $10,000, and then when I get to America, I'll give you 10 million, right? They sent like 20 mil to Nigeria for stimulus to go bail out the prince. Now, it doesn't matter because fiat currency is funny money. And if they lose $100 million, well, they just type $100 million more dollars in their computer and everything is fine. Now, on Bitcoin and blockchain, you know right where that stuff goes. You know right what happened to all of it, and everything is accounted for. That's the real thing, is that these bankers and the Federal Reserve, they want a cryptocurrency. They want one that tracks everything you do that they can tax immediately. The second that you give a $5 allowance to your kid, they want to tax it. It's called a central bank digital currency. They don't want to use something like Bitcoin. They don't want to use these other things because then it's an open window as to what they're doing with money. They don't like that. They want to spy on you. You don't get to spy on them. In interviews and public statements with federal officials and state authorities, warning the crypto financial industry vulnerable to hackers and fraud. Okay, we read that. We need additional authorities to prevent additional authorities. Authority? Who is an authority? To prevent transactions, products, and platforms from falling between regulatory cracks. Quote, code for we need to tax it. Gary Gensler, the chairman of the Securities and Exchange Commission, wrote in August in a letter to Senator Elizabeth Warren, Democrat of Massachusetts, about the dangers of cryptocurrency products. We also need more resources to protect investors in this growing volatile sector. Protecting investors. This is the part where the SEC, who goes out there and finds fraud and finds all these banks doing all these wicked, dastardly, devilish, evil things to their clients. And they go, that's not nice. We're going to have to fine you. Make the check payable to the SEC. Make the check payable to the U.S. Treasury. Not make the check payable to all the people you frauded. No. This is fascism, people. A company screws up, the government goes in there and fines the company, and the money goes to the government, not to the people they defrauded. The SEC has created a standalone office to coordinate investigations into cryptocurrency and digital assets. Boy, I bet there's a lot going on there in that office. You bet like 50 people that just watch Netflix all day. You know, have Coinbase up on their screen. It has recruited academics with related expertise to help it track fast-moving changes, acknowledging that it could take at least a year to write rules or legislation passed in Congress. Regulators may issue interim guidance to set some expectations to exert control over the industry. Hey, guys, nobody cares about the American dollar. Nobody cares what America does anymore. Nobody. Nor should they. I'm in America and I don't care what America does because cryptocurrency is global. The SEC can do whatever they want to, whatever they think they have the power to do, but at the end of the day, you got to prove you got jurisdiction over that stuff. You got to prove all these things. And hey, you want to be Orwellian about everything, then we can pack up and move to Mexico. Or any other country that doesn't like going to war every 5 years. Or maybe we'll just stay here and just not use your money. Amazon's going to be accepting crypto payments. Credit cards are accepting crypto payments. You can buy everything with a credit card and then just pay your credit card bill. Did you know that your tax obligation then would basically be, zero? If you're earning your money via, say, a Bitcoin or some other cryptocurrencies, and it never, ever at any point touches Federal Reserve notes, and then you just pay your credit card with crypto? BlockFi has already been targeted by regulators in 5 states that have accused it of violating local securities laws. And they might. Okay, I'm not saying that there is no case that SEC or the government shouldn't crack down on certain organizations and entities, because the cryptocurrency space is so new. Anybody can create a coin for about $20 or whatever the Ethereum fees are up to now. Who knows? Whatever your transaction fee is on Ethereum now, you can create your own blockchain. You can create your own thing. Register it on a chain, your own ERC20 coin, whatever you want. All right. If you start your own, you probably don't even need to pay anything. But what happens is you get these 20-year-olds out there that say, I got Uber coin or something, which is probably a real coin. Uber coin's going to go sky high. And then these places, they pay YouTube content creators a lot of money, like $1,000 a video, to pimp their coin and get everybody invested in it. And then, of course, the people who created the coin sell all of the coins, and everyone's stuck holding the bag that is empty because it was junk to begin with. Yes, those sorts of things the government should look into and go after. But at the other token is like, the government isn't there to protect stupid, okay? If you do invest in something and you don't do any research in it, or you buy it because some YouTuber told you to, it's kind of what you get, right? And honestly, people with these often referred to as shitcoins, right? People aren't investing millions of dollars into those, right? People are investing like $20, $30, couple $100, nothing serious. If you lose your $100, it's a learning experience. There are other larger entities out there, though, that want to pretend like they have something super special, and they create a coin and then they sell the coin to finance their business activities. Now, that is a security. I don't care what XRP says about it. That's a security. If you're financing all of your operations, if you hold all the coins except a small percentage, and you just sell the coins to finance your business and to pay your ginormous salaries, then you're operating as a security. And America would have a problem with it. I don't know about other places. Treasury Secretary Janet Yellen and Jerome Powell, the chair of the Federal Reserve, have also voiced concern. Yeah, she's a trip, Janet Yellen. She used to be very anti-bank until she started getting paid by the banks. And then we got to protect people from crypto. Even as the Fed and other central banks study whether to issue digital currencies of their own, well, of course they will. Mr. Powell has pointed to the proliferation of so-called stable coins. That's what they don't like, because it's too close to the dollar. It's better than the dollar. Stable coins are better than the dollars. Digital currencies whose value is typically pegged to the dollar and is frequently used in digital money transfers and other transactions like lending. We have a tradition in this country where the public's money is held in what's supposed to be a very safe asset. What is that very safe asset that the public's money is held in? A computer at the Federal Reserve? It's not backed by gold, it's not backed by silver, it's not backed by anything. The public's money is held in what is supposed to be a very safe asset. Well, given that money is actually a representation of debt that's on the population's blood, sweat, tears, as long as the population's alive, I guess it's a very safe asset. I don't know. I don't know how you can make a correlation that fiat money Is fiat even money? I would argue no. Fiat is fiat. Fiat is not money. You can transact with it. It's a currency. Is it money? Money is typically a term that's used when you're talking about preservation of wealth. Or if you put it under your mattress someday, it's still worth the same when you take it out, where you call it like fungible, something like that. The cryptocurrency banking frontier features a wide range of companies, and one end are those that operate models similar to those of traditional consumer-oriented banks. Like Blockfi or Kraken Bank, which has secured a special charter in Wyoming and hopes by the end of the year to take consumers' deposits and custody of their cryptocurrency holdings, but without the traditional federal deposit insurance. Oh my gosh. Oh my gosh. Yeah, so this is the new age of banking, where people who do not want to custody their own coins can pay a bank, or Kraken in this instance, which will be the new bank. They call it Kraken Bank, where they will custody your coins. And I'm pretty darn sure that you'd probably get some interest on it, like 5%. You custody stuff yourself, like Cardano, you're getting 5%. You custody Solana, you're getting 7%, right? Why would you not do that? And as a fee, they probably take 1% or something. That's where things are going. And the old brick and mortars don't like it, and they're playing catch up. But honestly, why would you even have, if it's not your keys to your crypto, it's not your crypto. So anything that calls itself a bank is the last place I would custody crypto. On the more radical end is decentralized finance, or DeFi, which is more akin to Wall Street for cryptocurrency. Players include Compound, a company in San Francisco that operates completely outside the regulatory system. Oh no! DeFi eliminates human intermediaries like brokers, bank clerks, and traders, and instead uses algorithms to execute financial transactions such as lending and borrowing. Yes, smart contracts. Crypto is the new shadow bank. Oh, it's not a shadow bank. Crypto is the new bank. It provides many of the same services, but without the consumer protections or financial stability that back up traditional systems. Somebody think of grandma and the children. Somebody think of grandma and the children. That's what it always comes down to. It's like spinning straw into gold, she added. I don't know what you're talking about there, Yellen. Lawmakers and regulators are worried that consumers are not always fully aware of the potential dangers of the new bank-like crypto services and decentralized finance platforms. Well, yes, they are, because everything is so new that in order to get involved with that, you have to be a very learned person who actually cares about your money and cares about the future and doesn't sit around playing video games and watching Netflix all day long in your mom's basement. These people are going to be all right. The ones waiting for the government to send them another check, those are the ones, yeah, they're going to have problems, but they're going to have problems no matter what you do. Always be aware that whenever these people are talking about its citizens that elect them to power to run the government, they talk about you as consumers. They don't talk about and say citizens. They don't say your customers. They use the lowest, crappiest term that they possibly can. That's when you know you don't really want to do business with certain places. And they start calling you you're just nothing more than a consumer. And if you're not consuming, what are you? You're not worth keeping around. That's for sure. Because they expect you to consume. And if you don't consume, you're not worth anything to the government. It's like companies like Disney will throw out any garbage thing onto the screen and say, well, the consumers didn't like that one. Well, I guess tough for them. They don't have a choice because we own all the movie theaters. We own all the studios. I guess they didn't like it. They're not very good consumers because they're not buying our crap. They're not worth anything to us because they're not consuming our crap. You're not customers, you're consumers. People who borrow against their crypto could face liquidation of their holdings. No. sometimes in entirely automated markets that are unregulated. So there's one example of some fly-by-night place out there that you can get like $100 loan on your crypto and you could get liquidated, potentially. But the reputable ones out there, it ain't gonna happen. From pawnbroker to bank, BlockFi's extraordinary growth and the recent crackdown by state regulators illustrates the fraught path of cryptocurrency financial service companies amid confusion about what they do. BlockFi's business is not dissimilar to that of a regular bank. It takes deposits of cryptocurrencies and pays interest on them. It makes loans in dollars to people who put cryptocurrency as collateral and tries to lend crypto to institutions that need it. Banks hardly do any of that. Banks counterfeit money. That's what banks do. That is what they do. They fraud everything. You don't get a loan from the bank. You get a loan from yourself. The bank doesn't ever have the money to give you. Ever. All they have is a ledger system, and the authorization for that money to be created to give you the loan comes from your signature. You go out and go get a mortgage, okay? Even in the old days, say you put down $20,000 for your house to get a house loan. Well, that $20,000 is used to generate the rest of the money. They didn't have the money in the bank. You're buying a house, you have your bank, you're buying it from some other bank. Do you think that the bank goes into the safe and drags out the $150,000 and goes and gives it to the other bank? No. It's just a ledger entry. And then money is created out of thin air because of your signature. That's it. And then the securities exchange. And everybody uses a 2-entry banking system where whatever you want to put over here, as long as it has something over on the other entry, everything is fine. All fraud. All fraud. Bitcoin, you can't do that. And BlockFi, you can't do that. When you can't defraud something and you can't manipulate the system, what do you need tellers for? What do you need banksters for? What do you need these things for? You don't. And it's a better system. And it's a fair system. For consumers, the main allure to BlockFi is the chance to take loans in dollars up to half the value of their crypto collateral, allowing customers to get cash without the tax hit of selling their digital assets or to leverage the value of holdings to buy more cryptocurrency. The company also offers interest up to 8%, blah, blah, blah. Well, this is all stuff that people can do with a house already. And crypto in America, Bitcoin in America, is considered basically like a house. Called getting a second mortgage, right? Why shouldn't you be able to do that with cryptocurrency? The thing is, banks right now don't have the facilities to do that, but I guarantee you, in 2 years, you'll be able to put your crypto up to get a loan for in any bank. If they're still open. Also, unlike a bank, BlockFi does not check credit scores, another meaningless attribute. Meaningless. Relying instead on the value customers' underlying crypto collateral. The company's executives argued the approach. See, here's the thing with your credit score is like you can have, you want to go buy a house and you have like 80% of the funds and you need to take a loan out for the rest of it. If your credit score is bad, they won't give you a loan. Like what? Or if you have the collateral for it, they still won't. Yeah, it's really dumb. And it's like you're playing with monopoly money anyway. To regulators, BlockFi's offerings are worrying and perplexing, so much so that in California, where BlockFi first sought a lender's license, officials initially advised it to instead apply for a pawnbroker license. The reasoning was that a customer seeking a loan from BlockFi hand over cryptocurrency holdings as collateral in the same way a customer might have a pawn shop, in which in exchange for cash, which is true. That's probably good advice. Ms. Marquez of BlockFi called the sheriff's office in San Francisco about a pawnbroker license only be redirected again. No, pawnbrokers licenses are only for physical goods. doesn't make any sense because Bitcoin is an asset like a house. It's like almost, it's treated as it's a physical good, even though it isn't. He recounted being told him, because crypto is a virtual asset, this license actually does not apply to you. No one knows what the heck is going on. But yeah, a pawnbroker would make sense. Undeterred, she went there and got there as a lender. Now the company holds licenses in 28 states. The interesting thing about these guys is like, why even bother with America? I know this is like where all the money is, but you can set up in any place else and just not have to go through the banking regulatory hassle. And so the rest of it is about what they're doing in DeFi and their DeFi protocols. We'll go down to the end. The overall market of stablecoins has ballooned to 117 billion. These things are effectively treated by the users as bank deposits. That's correct. You see a dip coming, you sell your crypto into stable coins that will maintain their value. And then when the dip comes, you buy. You move your stable coins into your crypto, you buy. The stuff never leaves the exchange. And it's usually cheap, unless you're dealing in Ethereum, in which case, you know, you'll have to sell a kidney or something in order to sell your crypto. Unlike actual deposits, they are not insured by the FDIC. If an account holders begin to have concern, they cannot get money out. They might have to trigger a bank run. They might try and trigger a bank run. Who cares? Who cares? It's virtual cryptocurrency. Now, a bank run in today's days where people try to go to their bank account and get cash, that's been a real thing for a very long time. That's the reason we have fiat currency, is because people in the 70s wanted to get their gold. They wanted to get their gold. And there was no gold because Fort Knox probably never had anything in it. And so old Nixon's got to go up there and go, well, we're just going to go temporarily off that gold standard, and then we'll bring it back. Right. One option worth considering, Ms. Warren said, can't imagine why she's not married, is to ban banks in the United States from holding cash deposits backing up stablecoins, which they could effectively end the surging market. Do these people not understand that crypto is on the internet? Their physical assets could be stored in any country, anywhere. The physical assets could be in El Salvador. People are dumb. Another possibility is that some could undermine the entire crypto ecosystem is the creation of a government-issued digital dollar. Yes, we have to go to the digital dollar. Look, guys, it's been in the plan for 30, 40 years. They're already working. I mean, ever since the internet was probably released specifically for the reason of a digital currency. Not so you can go up to Netflix, and not so you can go up to the hubs. You wouldn't need stable coins, you wouldn't need cryptocurrencies if you had a digital U.S. currency. Mr. Powell, the Fed chairman, said in July. I think that's one of the stronger arguments in its favor. What a clown. What a clown. Central bank digital currency compared to Bitcoin. Okay. Central bank digital currency is just going to be fiat. Fiat on a blockchain that spies on you. So that is that article about why the government don't want you to be into crypto. And that's why you need to be into crypto. Point blank. They're not your friends. They're not your friends. They think of you as a consumer. And if you're not consuming what they want you to consume, then you're worth less than nothing, because now you're working against all these consumers. You might be convincing some of those other consumers maybe you need to boycott something. They don't like boycotts. That used to be a big thing back in like the 80s and 90s, where a company did something found to be abhorrent by the general population, they would boycott the company. It wouldn't be, what's the SEC gonna do? What's the government gonna do? The government should really step in and do something. No, it was a rally to boycott businesses that step out of line. For instance, if YouTube existed in the 80s and in the 90s, and they were pulling the stuff, what they're doing with the the channels out there pulling things who are disagreeing with whatever the communist narrative of the day is, it would be boycotted. And everybody would be on Library, Odyssey. But the times they be a-changing. The times they be a-changing. So that's what we have with that. This is a long, long, long thing. This is a crypto freedom cast. About why you need crypto and what's going on behind the scenes with these people. And don't expect the government to be your friend or giving you handouts or whatever. You take their handouts, you use whatever you can use, because Social Security ain't going to be there. They told me that in high school. And I'm in my 40s. So if you guys are out there in your 20s, right, 20s and 30s, that means they ain't going to be there for you either. Well, what about the safety net and the retirement? Nope, they just get to steal 7%, 14% of your income and put it in a pretend piggy bank so they can go do a 20-year war in Afghanistan to grow drugs and mine lithium and kill people and shoot people up with experimental gene therapy things. That's what they do with it. And crypto is the freedom as far as this world goes. As far as the spiritual world, that's an entirely different matter. And as far as not getting caught up in 1984 too much, you need the cryptocurrency. And with that, that's what we got. It's been a pleasure. We'll see you next time.